Hey everybody, it's Mark here and welcome back to Digi Profits. In today's video, we're going to have a look at why I have been shorting Harmony 1. I will mention that I have stopped my short and have taken profits on it, but I am looking for other opportunities, either to go long or short. Now, during this whole downtrend, I did really well shorting the market back in January. I didn't do a lot of shorting in between during the months of February, March, April, and halfway through May. I basically took out some long positions, occasionally took profits, and you know what? I did a lot better when I was doing more shorting, to be perfectly honest, during this downtrend. And it's not necessarily something I enjoy doing. I much prefer, as a preference, I would rather be investing and going long. However, due to the nature of the market at the moment, it just pays to be mindful of shorting opportunities. I think that it's actually quite difficult to profit without shorting during the downtrend at the moment. But you've got to be careful with shorting. When you go long, you can hold on to something forever, and sooner or later, if it's a good asset, it will eventually go up and above where you bought it from, if it's a good asset for the long term. If you go short and you keep holding it, you're paying interest every day. What if that asset goes up and up and up and up and never stops going up? Then, sooner or later you're going to have to pay out on that short. And so it's very, very important. There are certain rules you follow. Like, you want to be able to set a stop position so that if you're short, it goes wrong, you miscalculated, it didn't cost you much. But saying that, in terms of taking profit, you want to take profit a lot further down on the short. There's no point shorting unless you think something's going significantly further down, so that you only have to win half your shorts to make a good deal of money. For me, I'm probably winning 70+% of my shorts, so it's actually been pretty good. In theory, I should have probably shorted a lot more than I have. But hindsight, it's a wonderful thing. I started off analyzing it versus past Bitcoin cycles and so forth, and now I'm analyzing the market more based on the macro than on anything else, because Bitcoin has never been through a recession. So therefore, things could be a lot more brutal than any other Bitcoin cycle that's been before. It's not a halving cycle, so it's something to bear in mind. Now, why did I short Harmony 1? The reason I shorted Harmony was because of the hack. So there was a hack that went on, as many of you guys know, where over $100 million worth of crypto was hacked, and that affected many of the wrapped tokens. Whether you had USDC on Harmony, if you had Bitcoin, Ethereum, if you had USDT on Harmony, Binance US dollars, BUSD, and there might have been a couple of other ones as well. $100 million worth of crypto. Okay, so now all of those wrapped assets have very little backing because of how much was taken out. So at first there was a drop in the price of one, and then the price of one bounced, and that's when I took out the short. Now, some people thought, well, the worst has just happened, and now it's, it went down and now it's bounced. What happens whenever there's a hack on a layer 1 blockchain? If there's a hack, then you will expect there to be a bounce, because people are taking out other tokens that are on that blockchain and they're putting it into the native token so that they can take it off the blockchain. So people were taking their BUSD, their USDC, their wrapped Bitcoin, anything they could, and they were selling it at a loss to buy Harmony 1 so that they could send the 1 over to an exchange and then exchange the 1 eventually for a stable coin over there. So as a result, for me, I had a significant amount of money in one USDC, and I lost. And it suddenly, at the time that I discovered the hack, which luckily was only within hours, it had dropped to 85 cents to the dollar. So it was worth 85 cents when it should have been worth $1. It should have been worth exactly what it is worth everywhere else. So I went ahead and I exchanged that for 1, just like everyone else did, and I sent it over to Binance, and then I turned it into USDC on Binance, right? So then it was the real USDC. And then by the end of that, I noticed that I had lost 15%. So I'd lost 15%, even though it was in a supposed stable coin. So it's a reasonable amount of money to have lost. It was thousands of dollars for me. But that was the point when I took half of what I had left at that point and I used it to short Harmony 1. And then that's when I had made the money back and made profit. So now I actually have more money than before the hack because I utilized my knowledge of this hack happening and knowing that it's inevitably going to drive the price down. So that's something to bear in mind. If you ever get a hack go ahead, take your stable coin. Like anyone that had UST, for instance, if they had UST and they sold it when it was losing its peg, imagine if they sold it at 90 cents, then they used that money to short Luna. Then they're going to be making a lot of money, right? That's just how you got to play it if that happens, if there's a big hack. At least that's the way I see it. So that's what I did. So the price, and I did a 3 times leverage short, which, I don't really like teaching leverage. I just say that it felt like it was just a slam dunk. It was pretty obvious that was going to happen, and one eventually did exactly what I thought it would do, and it went from when I took it at something like about here, like it had gone down due to the hack. It had its bounce up to here, and then it was at over 24 cents, and then bam, it went down to about 16 cents or something, 16.5 cents, and I took profit around here. I was already ready to take profit here, but instead of taking profit on a short, what I do is I just move my my stop loss down. So my stop loss is where if you put a stop position in, it means that if the price bounces up to this position, it'll sell you out of your short and just take profit there. But as the price kept falling, I just kept moving my stop position down and down and down. So eventually when it did bounce, bang, it just triggered my stop position there. So I just kept moving the stop down at that point, and that was all a bonus on top of what I'd already broken even around here somewhere, and then by here it was just profit. So that's just the way I played it. But I want to show you guys some ways to decide whether or not it's a good time to short or not in a particular currency from a technical point of view. Now you want to probably see a catalyst from the news as well. Like you want to see, you're only really shorting if we're in a bearish period of time. You don't really want to short during an uptrend that's going against the flow, and it's probably going against the flow to do anything too big when it comes to longs right now. You may accumulate a little bit more Bitcoin, that's fine, but you may not go too nuts because things could go lower before they go higher, and particularly when it comes to altcoins. Okay, so what indicators do I like to use? Well, I like to use the SCOF trend cycle, STC. So you just go to indicators in TradingView if you ever want to turn that one on. So the SCOF trend cycle. So that will show you, it's better than the, I'll just move myself over, is better than the, say, the moving average convergence divergence indicator, the MACD that some people use. It is an oscillator, but it's reasonably good at picking the time when, as long as you know what the trend is, it's pretty good at picking when to go in and out. So when it's a downtrend like we're in, and you could say we're in a downtrend because we are below the, on most time frames, in this case, this is a 4-hour time frame. So this is a 100 moving average. This is a 25 moving average, so it's 25 lots of 4 hours, and this is a 200 moving average, 200 lots of 4 hours. We're below all 3 of those frames, so we are clearly in a downtrend. Okay, when you're above all 3 of those frames, you then want to have a look at the daily as well and check that you're above all 3 as well, and you could start to see whether or not you're in an uptrend or whether or not you're in a sideways. But when you are clearly in a downtrend, you're below all 3 of those. Okay, you're below all 3 of them. Okay, and And I also have turned on Trend Trader Strategy. Okay, so that's another one you can turn on in indicators. Trend Trader Strategy. That is that. See that blue line there? And you see how these lines here are the colors of my candles here as well. I'll just turn it off for a moment so you see the difference. So if I turn it off, you see normal, like it's gone up, it's green, it's gone down, it's red. But instead, this Trend Trader Strategy shows more the actual momentum or the trend. It's like, yeah, this is a bounce up on an actual downtrend. Like we're in a downtrend. That's a bounce up during a downtrend, or that is a correction down during a little uptrend. So it just helps you visualize it a little bit better. So I'm not going to go into a short if that's not red, okay, for a starter. So you know you're still in a downtrend. You're below this line here as well, this little squiggly average line as well. And I'm below all three of those. Okay, so those are usually things I'm also looking for. I'm also looking at this on the SCOF trend cycle. If it's green, I'm not going into a short because it means that we could possibly, the momentum, there's enough momentum going on, and there's a lot of calculations that go into this. It's not just price, it's volume and other things. There's enough momentum to indicate we totally could be in the middle of a little bounce. That bounce in Harmony could go as high as hitting the pink line here, like it did here. It could go higher and break through it and get closer to the blue line. I don't really know. I still think we're in a downtrend, but it's not the ideal time to enter a short. If I'm going to enter that short, I'd rather enter it while that is a little bit red. So the red has started. We've hit about halfway. And now here is a good time to enter a short, which is when I did enter. So we're below all of our little indicators here on our moving averages, and it's red, and we're here. And then at that point, you just set your stop position. Maybe, well, what would indicate I got us completely wrong would be as perhaps if we broke above, maybe you could go as high as here if you want to be bullish above this sort of line here, or you could just go just slightly above the pink line and say, well, if we break through the pink line, about get close to 26 cents, that's when I'm going to lose out on it and just go, you know what, I'm just exiting this short. I've made a mistake. If we end up here, maybe we're on our way up to here. I don't know. So you have a stop position. Sometimes you might set it really tight and just set it like there, like really, really tight, so you can't lose much at all. But you might set a take profit position a lot further down, like down here, so that you make 3 times as much if you go down than if you were to go up. So that way, if you win half of your shorts, you're going to make 3 times here, and you lose 1 time there. You're making 3 to 1 every 50% of the time. You're still making good money. But I like to, if I'm awake at the time, I move this the take profit position. Sometimes I flick it off altogether if we're getting towards there, and I simply instead just move my take profit position to maybe above where we've moved to. Like I might move it to here, but because we're here, so that way if we bounce, bam, it'll take profit. But if not, I'll just shadow it down so that it keeps going down. If the coin keeps going down, then I can make even more out of it, while I'm still got a little bit of room. Okay, so I was also shorting Ethereum at the time as well. I've done a couple of shorts on Ethereum from like here to around here. I was shorting Ethereum around here. And at the moment, I'm not really keen to short Ethereum because we could be in the middle of a bounce. We're just about to hit around here. Yes, that could prove to be the zone that you bounce down from. It totally could. It's just not that clear when Bitcoin itself is it's in the middle of a green momentum at the moment. So I'm still looking out for it though. Totally, Bitcoin could get rejected off its 100 moving average here. It could get rejected and start moving down again, but it could totally break through and have a bounce, maybe as high as this moving average here, the 200, which could, by the time it's finished its highest point of its bounce, it could be up to 23k or something like that. It's not that likely. It's probably more likely to hit this resistance line and not break it, this one or this one. But at the moment, we're not in the red here. It's not showing any momentum downwards yet. We're not below our little trend lines. This is green, it's not red. So if Bitcoin isn't red, I don't really like to short anyway, because Bitcoin can drag the altcoins up with it. So I hope that makes sense. So if you're ever considering shorting, you want to look at those things. And ultimately, even looking at the RSI or the QQE, which is a more accurate version of the RSI, we probably had our ultimate time for shorting Bitcoin around here, right? But now we're down here. There's a definite possibility of a bounce. It's not saying it will bounce. I'm just saying there's that possibility of a bounce at that moment. So, it's a tricky time of things. You could say that is also the time to accumulate. If you were going to accumulate more Bitcoin, you'd be doing it here or around here. That's, from the long point of view, that's what you'd be thinking. I'm just mindful at the moment of that. Unless we get an inflation rate reading that is lower, and or the Fed pivots, then any bounce is just a bounce. It's probably not a new uptrend yet. If the Fed pivots, then things are off the table. Anything could change at that point, but that could be 3 months away. It could be 6 months away. I don't really know. So I'm just sort of watching that at the moment. So anyway, I just wanted to give you guys my thinking behind when I do shorting, and what I'm looking at for indicators. And when you're short, go in with a tiny position if you've never done shorting before. Try to make sure that you have shorted at least 10 times before you have a bigger position. So that means do it with something you can afford to lose, so you're not too worried. Even if that's as little as $100 or $50, just so you can learn, or do it with paper money, so you can just figure out what would have you made. Okay, so you don't have to expose yourself too much. And in order to do shorting, you need to be with an exchange such as KuCoin or Binance or Bybit or something like that. And shorting is simply it's simply where you borrow some of the other currency, and then when you go to pay it back, it costs you less to pay it back. So, for instance, I borrow, say, I'll just make up a number. Let's say I was to borrow $10,000 worth of Harmony One, and maybe I get given 50,000 Harmony One for that price. It's probably more than that. It's probably more like $1 million. But let's say I get $1 million Harmony One. But now the price of Harmony One is halved. So now to pay it back, it only costs me $5,000 to buy $1 million Harmony One and pay it back. So now I borrowed 10,000 worth. I've given it all back, so I paid $10,000 to borrow it. I've now given it all back to them. I have now made the difference because I borrowed it. I borrowed 10,000 worth, but I only had to pay 5,000 back to pay it back. So that other 5,000 is now mine. However, if it's a 3 times leveraged short, then it's not just 5,000 I have now. I now have 15,000. So I hope that makes some sort of sense in that regard. Okay, so anyway, be very, very careful with any sort of shorting. For some people, and I've done this before, sometimes shorting is easier if you just buy a short token, such as a down coin or a 3S coin. There are coins on most exchanges which basically are like shorting the market, but bear in mind that they recalibrate. So they're like shorting the market for that 24-hour period. So they take the price of the coin maybe at the start of the day, and as it moves up and down, they basically operate inverse to the price of the coin for the day. But then they reset at the new price for the day for the next day, and they calculate from there. So there is it's not as good as a regular short, but it's safer in that you cannot so easily go to zero very, very quickly because of the rebasing. Okay, so that's it for this particular video. I hope that you found it useful. And at the moment, I am really, really looking forward to a later stage in which to go long. I don't think now's the right time just yet. So at the moment, I'm just playing around with just little low-risk shorts.
at the moment, so that when it comes time to be able to accumulate properly, then I'll have even more to accumulate with. It's just literally a matter of us just looking at how the market is, what the interest rates are looking like, what's going on with the Fed, what's going on with oil prices, and everything else, and just saying, look, it is what it is at the moment. If I go look at the weekly, it's hard to deny that is a downtrend. It's hard to deny that the momentum of all that is a downtrend. We're still below, even on the weekly, we're below the 100, what are we below? We're below the 200-week moving average here. We're below the 100-week moving average. We're below, there's a lot of different time frames where it's just clearly still in a downtrend, and you want to see at least some momentum for the upside in order to, and you don't have to catch the exact bottom. You just want to be able to see that there's been at least some positive news, or there's got to be some sort of thing. Otherwise, what happens is during a downtrend of this sort of proportion, all it takes is a few more places to capitulate. Maybe it's not Celsius, maybe it's something else. Three Arrows obviously has to liquidate a lot of their stuff. I mean, those liquidations, the forced liquidations, can cause the price to go down further. And you also got to remember, when you can have a 50x move to the upside, you can also have a 50x move to the downside and then still have another 50x move up. It's a bit of a crazy market with crypto, so it pays to be careful. So anyway, that's it for this particular video. Please like the video and subscribe to the channel if you like. The more likes I get on a particular video, it shows me you want more content like that video. The more comments I get, that gives me good indications as well. And if you subscribe to the channel and ring that bell, then you get more videos from me as they come out. And also it sends some good positive messages to the algorithms and so forth that this is relevant content. All right, that's it for this video. I'll see you in the next one. Bye for now, everybody.